I'm waiting for some people to join. Kayla, Ray. All right, people are joining. This is the most musty live on all of finance TikTok. I know people are gonna go finance and they're gonna scroll the next video. Don't make that mistake. You gotta invest. You gotta invest. I was talking to someone the other day at my gym who's like a college kid or whatever, and he was like, "So what do you do?" And I was telling him about TikTok, and he was like, "Oh, I'll invest like when I get a little older." And I was like, "Why?" And he's like, "Oh, my parent, whoa, that was my chair. My chair is really cracky this morning." He was like, "Oh, my parents, they invest." And I was like, "So you're gonna wait until you're 40? Like, dude, come on, don't do that." Margot, good morning. A lot of big news today. Whether you are a pro wrestling fan or not, there's some big pro wrestling stock market related news. WWE, which is now TKO, has signed a deal with Netflix. So every Monday, every Friday, any pro wrestling programming that airs on traditional boring cable is now moving to Netflix for a 10-year deal. This is massive. Not only for TKO stock, which is up, it's up 20% this morning on the news, but also massive for Netflix because it means a huge audience is going to be tuning in multiple times per week. And maybe as a roundabout way, they'll start watching other programs on Netflix. There might be new accounts created. You remember last year, when Netflix said that they were cracking down on passwords. Hey, by the way, thank you for everyone who's hitting the screen. It brings in a lot of traffic early on in the live, and it makes these lives way more interesting. So I appreciate everyone who hits the screen a whole bunch. Look at this, 861 lives. I don't know who's doing that, all the liking, but I really appreciate it. More people will start joining soon as this pushes out. Anyway, Netflix, WWE, huge deal for both companies. Could be potentially TKO and The Rock all over CNBC this morning. No way. Did I miss it? I can't believe my mom didn't tell me. My mom is a huge CNBC junkie. My mom will text me at like 7:50 in the morning and be like, "Look up this stock for me." And I'll be like, "How did you hear about this?" And she's like, "Jim Cramer was talking about it." Hey, Manoj, good morning. The Rock rang the bell? No way, man. I didn't know that. I guess this is what I miss out on when I'm preparing for these lives and I'm not paying too much attention. But yes, humongous news. By the way, I wouldn't be surprised if one day The Rock took his $7 company public. There's just too many brands under it now. There's his tequila, his energy drink, his Under Armour deal isn't really his company, but his $7 Productions. He'll probably start. He has the ice cream company that he owns. What else does he own? I mean, The Rock owns a lot of stuff. Forex, I never traded. I don't know. I don't mess with Forex. Anyone I know who messes with Forex loses a lot of money. I don't know if anyone is watching this, but Spirit Airlines is just on fire this morning. The stock is up 12.5% right now. Spirit Airlines was going to merge with JetBlue, and Wall Street was very excited about it. And then the judge blocked it, and he was like, "No, I don't approve this." And the stock dumped. Let's see here. I'm going to look it up right now and see where it went. The Rock is now on the TKO board. Yes, I saw that, and I also saw that The Rock has retained rights for his name, so it's not owned by WWE anymore. He owns The Rock now. So save Spirit Airlines. Let's see here. In the last month, it went down 46%. It was trading at around $15 a share. The judge blocks this order for the JetBlue Spirit Airlines merger, and then it drops all the way down to $4 a few days later. So on January 16th, the stock was $15 a share. On January 18th, it was $4.50. So it got obliterated. And now the stock looks like it's turning around. It's up 12% today. Opinion on buying stocks is JetB, Verizon, and Home Depot for wanting dividends long term. JetB, just as long as you understand that it's a covered call ETF, so the dividends will change every month based on the volatility of the markets. Verizon has been a loser stock for the last decade. If you bought Verizon 10 years ago, you would still be down 12%. If you bought Verizon 5 years ago, you'd be down 26%. If you bought Verizon last year, you would be up 5%. So as always with the markets, it depends on when you buy it. Sometimes people will buy something like in the ARK fund, for example, at the tippy top, and they hate it. And then you have the person who bought ARK fund at the tippy bottom, or whatever the tippy bottom is, the opposite of tippy top to the hard bottom. People who bought ARK way down here love it. So, you bought Verizon a year ago, you're up 5.5%, and you're getting their 6.72% dividend. Bippity bottom, you got it. They also have a dividend safety grade of C+, which is a little bit on the nervous kind of side. However, 19 years of dividend growth. They've grown their dividend 2% in the last 5 years, which they don't really have to grow their dividend. I think they're going for like dividend king status, which is 25 years of consistent dividend growth. Look, Verizon, at the end of the day, they have their built-in customer base, Tesla has been trashed since the last split. Yeah, Tesla and their earnings are out on Friday. If many of you might follow like user Ghostbox, his name is Dave. He's another guy out here on TikTok. He said if it breaks below the 190s, it could be done. Not forever, but just temporarily. Lucid, it's garbage. It's a penny stock. I think it's a penny stock, right? Anything under $5. It's $2.99. It's up 5% today, but honestly, with something like Lucid, I just look at it like a lottery ticket. So if I go to buy a lottery ticket, I'm not spending the most money. I'm only putting in what I'm willing to lose, and I have the same approach for Lucid. Penny's point of view. Good morning. DDTG. That is, I don't know what that is. DDTG. I think you made a typo or something. For buck, you said DDTG pump. DDTG. I'm searching for that. I don't see that anywhere. Jetpack also asked about Home Depot. I love Home Depot. I think Home Depot is like an all-weather stock. In a recession or in rough times, people are doing their own home repairs instead of hiring someone. In a booming economy, hey, Chris Taylor, thanks for the rose. In a booming economy where everyone's working and getting paid a lot of money and they have disposable income, they're going to Home Depot and they're buying a new dishwasher, they're buying appliances, they're upgrading. So no matter what's going on, hey, user 87, thank you for the rose. So no matter what's going on, Home Depot always seems to be doing okay. In the last 10 years, it's up 340%, which is massive. They also will give you a 2.34% dividend. Really, just look at it like a bonus. There are higher dividend paying stocks out there like Altria, the tobacco company. They have a 9.68% dividend, but they don't have a lot of growth. In fact, the stock is kind of on a decline. In the last 10 years, the stock is only up 8%. That's not a lot. So it's always about the trade-off for you as an investor. Do you want a company like Home Depot or McDonald's that has a smaller dividend but a little bit more growth? Or do you want a company like Coca-Cola, which doesn't really have a lot of growth anymore? They've saturated every market. No matter where you go in the world, you're going to see Coca-Cola. But they have a little bit of a higher dividend. All right, scrolling to the bottom. Mara and Coin are gonna crash. I think they already have begun. Coinbase last year was up 300%. It has fallen so hard that now it is only up 120%. Year to date, since January began, Coinbase is down 29%. I think this Bitcoin ETF does a lot of good for the crypto market in terms of stability, but also that volatility is what made crypto so exciting. And without that, I think it could just be a little slow and steady now. Let's see. I'm going to scroll up to the bottom. Hey, Mousetails, are you in here? Good morning if you are. How did you predict the Spirit rally? There was no prediction about it. This is just experience-based. When a stock drops that hard, I'm expecting some sort of bounce. And it's not guaranteed, obviously. Just because it goes down a lot doesn't mean it'll bounce. But I've been trading stocks for 13 years. When I see a stock go from $15 to $4 overnight, I'm thinking, let's look at the news. Maybe it's something catastrophic. Then I'm going to stay away. He just blocked the merger. I mean, no big deal. And then they set an appeal. As soon as they said, well, we're setting this appeal and we're going to try to go again with the merger, and the stock kind of leveled off and started to move back higher, I got in. So I know, you can try to catch a bottom here. Let me just show the screen here for you to see. Flip camera. Okay, so here's the chart for Spirit Airlines, and you can see that it was in the 15s, and then boom, it dumps. Now, it did get oversold here, according to the relative strength index. But in my opinion, technical analysis doesn't really mean a whole lot when there's like massive news around the company. It can continue to drop lower. So for me, traditionally as a stock trader, this is kind of when I see this, I'm thinking like, oh, maybe I buy. But in the case of Spirit Airlines, I was like, you know what, I'm going to sit this thing out and I'm going to wait. Even though, yeah, I could have guessed, I could have bought it here at 404 and I'd be up way more, but you don't know what's going to happen. And so as a stock trader, for me, I'm thinking I want to wait until this thing kind of recovers a little bit. And you can see here, it kind of bounces. And my thought was it's either going to be like a dead cat bounce where it moves a little bit and then it falls lower, or it'll kind of level out, trade sideways, or move higher. And I ended up picking up the stock around here at, where was it? Where did I get it? I got it the next day at $6.06. And I was waiting for it to break over this 20-day moving average, which is this blue line here. And it does, right there. And then we get a big uptick in volume, huge volume. That's this blue stuff right here. This is volume, lots of volume. And I said, oh man, I got to get in. So I bought in at 607. And as you can see, it's 924 right now. There was no real prediction though. I mean, I didn't predict it. I didn't guess. I just kind of have experience. And I said, oh man, this thing dumped. It came back. The volume increased and it started pushing higher. And that's when I got in. Do I think that it will go much higher? Oops. That is anyone's guess. When you look at the, let me pull it up here. Save. The short interest on this stock is pretty high at 17%. So it's being heavily shorted. And because the stock is now going to the upside, it's moving higher, all of these shorts who were betting against it now have to cover their short, which can drive the stock price higher. It creates more buying pressure as it has a short squeeze. We all remember short squeezes from AMC and GameStop. So there was talk this morning on some social media platforms of, is Save going to be the next GameStop? I don't know. Your guess is as good as mine. As this thing continues to push higher, more people will come in probably trying to short it and bet against it. If it goes higher, they'll have to cover, and this can go on and on and on for a period of time, or not. Maybe it just fizzles out and it loses momentum and the stock tanks from here. I don't really know. For me, because I know people are curious, I only put in what I was willing to lose, and I'm just going to ride it out. We'll see what happens. Typically, as a stock trader, I would be taking my profits by now. I'm up 40. Let me see here. I'm up 49%. As far as a stock trade goes, typically I would be out. I would be taking this profit. But this, I'm pulling an AMC and I'm pulling a Wall Street Bets Reddit GameStop kind of approach, and I'm just saying, hey, we'll see what happens. I am curious, so I'm just gonna hold it. And if I end up losing everything, no big deal. And if I end up making some money, cool. What instrument would you buy today? I don't know. I mean, it depends on who you are and what kind of investor you want to be. This is for user 87. If I'm trading stocks, it's going to fluctuate day to day. If I'm an investor, probably nothing. I'm not looking to buy a stock every single day. I bought Leaps on Apple during COVID and been riding that for a few years. This is awesome. He pumped Save. Well, not really. Dave Portnoy. Yeah, okay. Kava and TKO looking good today. Let's take a look at Kava. Kava is $47. It hit $48 this morning. Well, I'm a huge fan of Kava. Pfizer. Pfizer was on my list for 2024. I haven't yet purchased it. Someone asked, what am I buying today? I'm not buying anything today. But Pfizer has been something that I'm considering. They have a very good dividend at 5.93%. Let's see here, Pfizer. They have a dividend safety grade of B-, 13 years of dividend growth. I like it. It's something I might consider. This is a stock also that has fallen considerably over the years, similar to Verizon. Super Micro Computer Company, SMCI, has been going crazy too lately. Let's see. Yesterday it was up a whole bunch, right? In the last 5 days, it's up 37%, which is nuts. Any words on Lucid? Lottery ticket. I'd only put in what I was willing to lose. Okay, I'm scrolling down to the bottom and I'll work my way back up. David says, I regret selling my shares of Moderna at 29. Well, Moderna's 101 now, so yeah, it went up quite a bit. However, Moderna has a warning. It says Moderna has the characteristics which have been historically associated with poor future stock performance. They have declining growth and negative earnings per share revisions. It gets a sell rating and it has a growth grade of F. So, yes, you missed it. But the question, I guess, would be, if you had held it, would you be taking profits now or would you be holding on? If you think that, it's down 48% in the last 12 months. So everyone's got a stock like that. What are your thoughts on QQQE? This is equal weighted. I don't really like equal weight ETFs, only because, for those who don't know, you can have market cap weighted and equal weight. Market cap rated, and let me pull up the other one. Market cap rated, weighted, is largest companies are the heaviest positions in the portfolio. So something like an Apple and Microsoft and Amazon, they have more shares of those. Equal weight means they have the exact same amount for every single company, so it all kind of shakes out equally. I'll give you an example here. Their top 10 holdings are AMD, Nvidia, Marvel, Moderna, Intuitive, and they all are about 1.2 to 1.5%. So they hold everything equally. If you look at QQQ, let me pull it up and show what a market cap weighted one would look like. Apple is 8%. It's almost 9%. Microsoft is 8.8. Amazon is 4.8. So that is market cap weighted. Equal weight, I don't like, because you're always going to have stocks that outperform other stocks, but when everything is equal weight, the performance can kind of drag down. So let's take a look here. QQQE in the last 12 months is up 24%, but QQQ, which is market cap weighted, is up 46%. So even though they have the exact same investments, market cap is almost double. Is options trading a legit thing or like a TikTok trading scam? Oh, hey, hello. Options trading is real. I lose money on it all the time. I've almost never been successful with options trading. Just because I haven't, by the way, doesn't mean Anya. Doesn't mean that there aren't people who are successful at it. It's just something that I've never been able to. It's never been something that I've been able to master. I know I have friends who trade options and they can be mildly successful or very successful. Hello, Laura, but I never got into it. And yes, like Ghost is saying, people will try to scam you by teaching it. And then QQQY, we didn't answer. QQQY is an enhanced options ETF fund. So I'm guessing that they're selling some sort of covered call. It is down a lot. So they're not actually investing in QQQ. So your first question was, should I invest in QQQE, which is equal weight, or should I buy covered calls? They're totally separate investments. What I would do, since I can't give financial advice, is I would look at something like QQQM, like the letter M, like McDonald's. QQQM is the exact same thing as QQQ. It's just a little bit cheaper and it has a lower expense ratio or fee. And then I would also, in addition to that, look at something like QQQY, which is the options covered call thing, because QQQY is going to go down. As volatility comes in and QQQ or QQQM goes higher and higher, the shares that QQQY invest in will keep getting called away, which means QQQY won't benefit from the growth that QQQ is experiencing. They will be able to generate some income for you, though. So you have to look at it as a two-pronged approach. You have QQQ for your growth and long-term investment. You have QQQY for your dividend income, but it'll never outperform QQQ. How much do you make monthly? I don't share. You want the best companies weighted heavier. I like the way of saying that. Buck, great way of saying that. David says, I just graduated college, starting my first big boy job and trying to get back into trading. Trading isn't for everybody, especially if you have a big boy job now. Congratulations. It could be a little harder to trade. I think as a stock trader, it's really best if you can do it. Swing trading is probably better for you if you're working a full-time job, so you can set alerts and you can do all of your charts and set up your price targets and stuff like that, set your orders to sell for you because you aren't maybe able to look at your phone too much if you're working. Day trading would be a lot harder to do with a full-time job because you really are glued to your screen. Nvidia all the way. ARM has been bullish. And then the guy who regretted selling Moderna. Do you use a Bloomberg portal? No, I don't. I trade on TD Ameritrade's Thinkorswim, which is now Schwab's Thinkorswim. The data was from TipRanks. I don't know what data you were referencing, but I use TipRanks and I use Seeking Alpha predominantly. Buck asked if I trade options. No. How much did I start with? I started with a lot only because I was living at home in my early 20s when I got into stock trading. I was living at home. I was working double shifts in the restaurant industry. And when I left the restaurant industry, I worked in the fitness industry. And all the money that I made went into my savings account. I didn't really know back then to invest. I had talked to one guy. I say I've been investing for 20 years and I've been picking up stocks like these casually. But really intense knowledge on investing, I didn't have. And I talked to somebody and I said, hey, should I open a Roth IRA? And he said, nah, don't waste your time. So that was my experience with financial experts back then, who told me don't waste your time with a Roth IRA, which was the dumbest, stupidest advice I ever got from a professional. That and the broker who told me not to buy Apple when it was $9 a share because no one wanted to listen to music on a computer. So, anyway, I started with a lot because I was living at home. My costs were very low. I didn't have rent. I didn't have big expenses. When I worked in the restaurant industry, all of my meals I ate where I worked. So I didn't really spend a lot on groceries. And I just piled up money. And when it was time for me to start trading, I had a lot of reserves. But don't look at it in terms of you have to start with the most. You just start. Get the experience. Even if you're trading with a minimal amount of money, if you're new, just get the experience. And same goes for investing. I know NVIDIA is all the hype, but I believe new graphic cards soon. But I believe it. Oh, you believe? Oh, yeah, okay. I love NVIDIA. Ex-dividend tomorrow is for save. I saw that. Funny enough, so I guess I'm going to get a dividend. I didn't even know they paid a dividend until... Wait, they don't pay a dividend. Why does it say ex-dividend is tomorrow for Spirit Airlines if they don't pay a dividend? I guess they do pay a dividend, or it's a special one-time thing. I don't understand because it says no dividend. I don't know. Let's take a look at somewhere else. Maybe that's an error. Oh yeah, dividend rate. It looks like maybe they cut their dividend. It looks like maybe they cut their dividend, and this could be the last one that's paying out because it says they don't currently pay one. Have you made any trades today? No. I'm just sitting on my Spirit Airlines stock, which is pulled back a little now. What stock would you buy today? Why today? Whenever people ask me, hey, what stock should I buy today? You don't have to be buying stocks all the time. You can just have your index funds and a couple of dividend stocks or growth companies, whatever you want. I don't know if you're asking that in terms of stock trading or investing. This is for user 87. But I'm I'm an investor who gets in a little at a time. I'll start a position in something that I like a lump sum, but not the whole lump sum. If I want 100 shares in a company, I'll buy 50, and then I'll watch it and I'll see what happens globally, like in the markets and the economy and stuff like that. And if I think we're in a really strong bull market, maybe I'll just buy the whole position. And if I think we're heading into like choppy times, maybe I'll buy half. I'll buy 50 shares, and then I'll watch and I'll go, oh, bad news came out and the stocks all dropped. I'll go and buy a little bit more this time. But I'm not always looking for like new stocks. All right, let's go to the bottom and I'll work my way back up. Spirit Airlines pays a monthly dividend. I don't see that though anymore. On all the websites that I'm looking at, it says no dividend. Let me look here. You're right though. Oh, it's special irregular. Okay. Interesting. I wonder why it says no dividend. Probably because it's not. They must have structured it some way as to make it like special, so they don't. I don't really understand. This is Jake, like from State Farm. Guys, what's the best place to start investing? Is it an app, a website? Any brokerage is fine. Look, people these days, like all the brokerages are free now. I think there are maybe one or two who charge for you to buy and sell, but most of the major ones these days are free. Don't overcomplicate it. I think people overcomplicate investing, and they go, what's the right brokerage? Which one should I buy? I don't know which one to open. Don't worry about it. Schwab, Fidelity, Robinhood, Webull, they're all fine. Some are a little better than others. It depends on how involved of an investor you want to be. If you really want to be involved and you want a financial advisor on speed dial, someone that you can call and ask a question, then you would want to go with a more established one like Schwab or Fidelity. If you were a casual investor and you just wanted to buy your index fund every month, Robinhood is fine. Even though we don't like Robinhood because of what they did with AMC and GameStop a few years ago, for a casual investor, it's still fine. What is your criteria for letting a stock ride versus cutting it off? This is for Jesse. I guess my follow-up to you would be, are we talking about trading or investing? If it's an investment, I let it ride for forever. I mean, the stocks that I buy, I plan on holding until I'm dead. Or something catastrophic happens to me financially and I need to sell them. But generally, if I'm buying something, I'm not buying it because I hope it goes up a little short term. I'm buying it because I plan on it holding it forever. My criteria then for cutting out a stock would be a couple things. If it had a unusually high rally, I might consider taking some profits. I don't always, though. I mean, I bought NVIDIA a year ago and I'm up over 200%. That's massive. I mean, you can look at a company like McDonald's, which is up 200% in the last decade, and NVIDIA did that in a year. But I still believe that NVIDIA is going to continue to grow. And I bought it at such a low price. I want to hold on to that price at that low cost basis. I don't want to sell it and then have to buy it back higher at 600. So I'm holding that one. On the other hand, I might need to free up some capital, like with NVIDIA. I talked about this the other day. I wanted to buy stock in NVIDIA, but I was tight on money. So I was like, well, what am I holding in my portfolio that I don't think will perform as well as I think NVIDIA will perform? And it turned out to be Microsoft. So I dumped my Microsoft stock and I bought NVIDIA. So that's another example. When it comes for a stock trade, it's technical analysis all the way. That's what I use. What do you think is the comparison now for $9 Apple stock? I don't know. I think off the top of my head, when I see a question like that, like what's the next gonna be Apple? For me, I go to something like Kava, which is $47 a share, so it's not $9, but I definitely think Kava is the next Chipotle. I'm not saying that I think Kava will get into the $3,000 per share price range, although I would love it if it did. But I think Kava, maybe SoFi or Palantir could be another one, but you're just guessing at this point. Maybe Rivian could be like the next Tesla, but again, you're just guessing. in 2003, I didn't know that Apple was going to do what it ended up doing, or I would have bought as much as I possibly could have afforded. The Rock is joining the TKO board. I saw that. Do you think this is for Jacob? And by the way, if you ask a question, don't leave. I'm going to answer. I answer everyone's question. Jacob, do you think dividend stocks should be a part of retirement plan or income investing? I think retirement plan and income investing are the same thing. So yes. Best avenue for investing, I don't really understand. Just open a brokerage account. Check my pinned video on, if you're new to investing, do this. It's one of the top 3 videos that are pinned on my page. User 56, do you day trade? Yes. People also don't know that you can paper day trade to practice. Yes, that is an absolutely good idea. Also, I'll add to David's comment. If you're going to paper trade with this is fake money on a fake account. They're not real trades. It's just to give you practice. Paper trade with the amount of money you plan to actually trade with. So if you're going to trade with $1,000 when you're ready and you have the experience, paper trade with $1,000. Don't paper trade with $1 million, because then you'll have unrealistic expectations of what you could make or lose. And then when you jump over from fake trading with $1 million to real trading with $1,000, you're going to be like, $2 profit? What is this? So get used to trading with what you plan on actually trading with. 26 years old, starting in enough. 26-year-old starting enough young to compound the interest? Yes. Let's see. What app do you guys think use to trade? Robinhood or Acorns? They're all fine. Don't worry about it. Benefits of having a Roth and a 401k. So I know I don't have personal experience with this because I'm a self-employed stock trader. But from what I've heard from friends, they go Roth IRA first because of the tax incentives, then 401k, then individual, and they max them out in that order. To max out a Roth IRA this year, $7,000. To max out a 401k, I think is $23,500, but I'm not 100% that's the number. If you are fortunate enough to max out both, you're in a great place. If not, then you go Roth first and then 401k, whatever else you can. Also, 401ks, not all of them let you pick what you want. Some do, some don't. It depends on, I guess, your employer. Is Coney too risky? Yes, Coney is extremely risky. All covered call options, ETFs, come with a level of risk. The reason people like JEPI, QILD, JEPQ, for example, is because they're diversified. They're selling covered calls on a lot of different companies. Coney, for example, is only selling Coinbase. TSLY is only selling Tesla. So if that company's volatility dies off, the dividends will slow down, the fund will lose value. This is why people prefer to put their money in something like JEPI, which gives them more insulation and more diversity. If you don't have that, then let's say something happens with Coinbase and the volatility just dumps off. Those big fat Coinbase dividends will diminish dramatically. So that's a huge risk. I did an interview once to work at Bloomberg Portal. I didn't get it, but glad for the opportunity. That's cool. Do you like any Vanguard ETFs? Yes, I like Vanguard ETFs. What are your thoughts on Calvin Hill? I don't know who that is. Who's Calvin Hill? Calvin Hill. Calvin Hill is an American professional football player. He played for the Cowboys and the formerly Redskins and the Cleveland Browns. I don't know. I don't watch football. Where's the best place to get accurate charts? They're all going to be accurate. There's a Seeking Alpha, TD Ameritrade with their Thinkorswim. I'm sure Yahoo has charts too. There's a chart website. Stockcharts.com is another website. Yvonne says, could you talk more about swing trading? Yes. If you have specific questions, ask below. But generally, a day trade means the stock market opens at 9:30 and it closes at 4. At 4 p.m., whatever stock you bought that day, you sell. So win, lose, or draw, you sell. And then the following morning, you start all over again. You make a couple trades, By the time the market is closed, you sell everything and you start over again the next day. Day trading is every day is a new day. Swing trading is anything more than a day but under a year. But generally, it can be a couple days to a few weeks, even maybe sometimes a couple months if the market is really, really on fire and going higher and higher and higher. I've been known to swing trade something for like 3 or 4 months. It just kept going up and up and up. Go read a book called How I Made $2 Million in the Stock Market. I know it's a gimmicky title, but the guy wrote it in the 1960s. He basically invented swing trading and momentum investing through something called his name is Nicholas Darvis. And the book is like $5 on Amazon. It's this big. You'll read it in 2 days. And it's also kind of historically cool to see how this guy figured out how he could swing trade in the 1950s without technology. So very, very cool, or at least modern technology. He didn't have a smartphone or an internet. Anywhere in the world that he was traveling, he would send telegrams to his broker. So very, very cool. But swing trading, you basically ride the momentum. So like a stock will sell off, it'll go sideways for a little bit, and then maybe it starts to climb back up. You ride that wave higher, and at a certain point, you sell it and you take your profits. You can sell it when it gets overbought using something called the relative strength index. Check my YouTube channel if you want to learn more about those. Or you can sell it when you have a price target in mind. Like you say, I want to make 15% on this trade, and you get there. Or you can sell it when the stock starts to pull back from profit taking. You've got options. Also, I'll just say it now because there's some people in here. Go to my website. It's kennethsuna.com. You can click on the menu and download my free resource guide, which has all the information that anyone needs to be a trader or an investor. There are templates in the menu as well for comparing two stocks, for comparing ETFs. There's a lot of templates that are free. There's a dividend, kind of like, like a brief on what dividends are. It's probably like a page long, so it's not very long. So if you wanted to learn more about that, you could go there as well. And my website has no email sign up. I'm not going to try to spam you with like courses or books or, go watch this video. I'm not going to do any of that. It's just on the website and it's free. Rick Gilbert, isn't a big earnings this week? Yes, Tesla has earnings this week. Let's see who else has earnings this week. Earnings Whisperer. Here we go. This is the account I follow on Instagram. It's just EPS Whispers. Earnings Whispers. Okay, so yesterday we had United and Logitech. Today we had Verizon this morning, 3M, General Electric, Halliburton, Johnson & Johnson, Lockheed Martin, Procter & Gamble, which is way up this morning, D.R. Horton for housing. When the markets close today, we have Netflix already coming off of the huge news that Netflix is going to be airing Monday Night Raw. All WWE shows are coming to Netflix for 10 years. That's massive for both companies. Intuitive Surgical, Texas Instruments. Tomorrow is AT&T, Progressive, Tesla, IBM. On Thursday, it's American Airlines, NextEra Energy, Alaska Airlines, Southwest, so a lot of airline companies, Intel, Visa, and then T-Mobile, Capital One, and then on Friday, before the markets open, American Express. So it's going to be a very, very busy week. Norfolk Southern also has earnings on Friday. It's a lot of earnings this week. David, I want to swing trade. I know it's best to just be an investor. You can do both. Free Spirit Adventurer says, Defiance and Yield Max, be very careful. Great dividends, but the stock price continues to go down. Yeah, that's the problem with these covered calls, is that because they're not investing in the company, they're not benefiting from the growth. The shares continually get called away, and people are also selling their positions in these funds because the dividends used to be so much higher, and now the dividends have pulled back pretty dramatically for some of them. Oh, wait, hold on. Let's go take a look at Coney. Coney. Okay, here we go. Let's look at the Coinbase one, CONY. Their dividend, I'm going to go back to the beginning. In October, it was $1.21. In November, it was $1.08. In December, it was $2.46, which is massive for every share that you own. A lot of this was probably in anticipation of the Bitcoin ETF. And then in January it was $2.69. But now the stock has fallen. So we have to wait and see what their next dividend will be for February. I'm gonna guess that it's gonna be a little bit lower. Let's also look at TSLY as another example. They've been in existence for a little bit longer than the Coinbase one. In October, their dividend was, in August it was 83 cents. In September it was 58 cents. In October it was 57 cents. In November it was 58 cents. In December it was 60 cents. And in January it was 55 cents. So from 80 cents, 83 cents in August all the way down to 55 cents in January. It's lost a lot of their dividend as well. I thought QQQM was better than QQQ. They're the exact same. So the only difference is that QQQM has it's cheaper per share and they have a lower fee. But the growth is the same. The holdings are the same. I would go with QQQM over QQQ for those two reasons. Another reason that QQQ is very popular is because it has a more robust options chain. So if you're trading options on the QQQ, you would want QQQ like selling covered calls and whatever versus QQQM. Race. Ferrari. Okay, so Ferrari stock is $332 a share. In the last 12 months, it's up 36%. In the last 5 years, it's up 197%. And in the last decade, it hasn't even been public that long. Since going public in 2015, so 9 years basically, the stock is up 558%. That's massive for Ferrari. They also have a little bit of a dividend, but it's minimal. Let's take a look and see what the 1-year price target is for Ferrari too. I'm curious. It's not much. I mean, it's 332 right now. Their 1-year price target is 366, so it's 10%. It's split evenly. There are 16 analysts covering it. 8 holds, 8 buys. David, thank you for the follow. Robin 5.0, thank you for the follow. Sabria, I didn't see what you're saying thank you guys for, but thank you for helping her. It was the options thing. I got you. Vivi, thank you also for the follow. Lots of new follows this morning. Okay, 60 new comments. I'm going down and I'll work my way back up. Should I transfer my Robinhood account to Schwab? You don't have to. You can. Don't sell everything. A mistake a lot of people make is... My neighbor is like shoveling her yard. What is that? That's going to be really annoying. Hey, Brianna, hello. Should you sell Square or hold it? I mean, I can't give financial advice, so I can't tell you what to do. However, I'll tell you what the analysts think. By the way, everyone go follow Brianna. She's a TikTok friend. She makes a lot of great content about her vending machine businesses, which are very cool and super lucrative. And actually, maybe I should put a vending machine in my building because we have laundry rooms in my building, and a vending machine would be pretty sweet. But then I would be tempted to just like go buy my own snacks. Block is $66, and their 1-year price target, according to the analysts, is $78. That is a almost 18% move. There are also 31 analysts covering the stock, which gives me peace of mind. It's not just one analyst who says go buy it. Of the 31 who are covering it, 0 recommend that you sell it. 7 say if you own it already, don't buy more, but don't sell what you have, just hold it. And 24 recommend that you buy it. So I can't tell you what to do, but the analysts can, and 24 of the 31 say that you should buy it. Nike is currently $101 a share, and they have a 1-year price target of $124. That's 22% potential upside if the analysts are right. And Brianna, I should also say, analysts are right about 30% of the time. So it's not a guarantee, which you probably know. It's not a guarantee, but the fact that there are 31 analysts covering Square and 24 4 of them give it a higher price target. And by the way, $78 is the average price target. The highest price target is $100. So if I owned Square, I don't think I would be looking to sell it. Another headline says the turnaround is underway. So if you're sitting on a loss here, one option for you also might be to buy a little bit more when you're down so much. Cindy, hasn't Vanguard been proven to have the lowest fees? Actually, I think Fidelity has some zero fee ETFs. JEPQ instead of QQQ. You can absolutely do JEPQ instead of QQQ, but they're different. So you have to understand that JEPQ is sort of like a hybrid covered call ETF. So they invest in some companies and they sell some covered calls, which is why last year JEPQ went up 19%, whereas something like JEPI didn't go up as much because they went up 1% because their shares kept getting called away. So JEPQ says, hey, let's buy some and hold, and let's keep the other half for selling covered calls for premium. QQQ isn't a covered call ETF. QQQ is just a NASDAQ 100 that gives you exposure to the, let's see, 102 companies on the NASDAQ 100. So another option would be both. Brianna, I hope that answered your question about Square. Should I so Anthony, sorry, I think I was talking about Anthony and interrupted. Anthony, your question is, should I transfer Robinhood to Schwab? First of all, I'll say don't sell it. A lot of mistakes people make is they go, I'm in this account, I don't want to work with this account anymore, I want to move to a different brokerage. So I'm going to sell all my shares and I'll repurchase them at the other account. Number one, that's a taxable event, likely, so you're going to owe taxes. If you're doing this in a Roth IRA, there could be penalties for selling. Just call Schwab and say, hey, I have a Robinhood account, I want to move it over. They will give you the forms that you need to make that happen. My kind-hearted is saying it's his name plus.com. Yes, my website is kennethsuna.com. Click on the menu. There's a lot of great free resources, and they're totally free. There's no email sign up. There's no PayPal. There's no Venmo. There's no Patreon. There's no leave a tip and it'll unlock for you. It's nothing. It's all free. AMD I like. I think it's going to be fine. JEPQ I like. Pognat00. I think I'm definitely pronouncing your name wrong. My free resource guide is on my website. Any thoughts on RSI to buy? I don't think I understand the question. RSI, are you talking about Rush Street Interactive? Like, are you talking about the stock, or are you talking about the relative strength index for technical analysis? Rush Street Interactive, I've never heard of. It's a penny stock. It's under $5. It's $4.99 right now. So right now it's a penny stock. If it goes up 1 more cent, it won't be a penny stock anymore. In the last 12 months, it's up 20%. It is casinos and gaming. In the last 5 years, it's only been public since 2020, and in that time, it's down 48%. So I would view it like a lottery ticket. The name of the book, this is for IX. It's a lot of numbers. IX, you said, what's the name of the book? It's called How I Made $2 Million in the Stock Market by Nicholas Darvas. His last name is Darvas. Just type in Darvas on Amazon. You'll find it. It's $5.99. It's this big. It's a great book. You could also click on the link in my bio. However, I had a sponsorship the other day here on TikTok, so they're in my link in bio now. But if you go on my Instagram account, you can click on the link in bio there, and it'll take you to an Amazon store where you can buy all the books that I like. Sticker Obsession says, laughing my ass off. I don't know what that was about. Big Bird, can you buy and sell on the same day, or do you have to let it settle? It depends on the account that you have. If you have a cash account, there's a 2 or 3 day settlement period. If you have a lot of cash in the account, though, you can do that over and over. If you have a margin account, it'll settle same day. You also have to be aware of something called a pattern day trading rule. which is if you make 4 trades, if you make 4 trades in a 5-day period, your account gets flagged as a pattern day trader. I think this is with a margin account, so you need to have a cash account to get around it. Let me look. Yeah, it's a... If you have a cash account, you're good. Oh, no, I scrolled up and I wasn't done. No, the investor Calvin Hill. I'm not sure who that is either. I'm sorry. People don't like Robinhood because during AMC and GameStop, they came in and said, you cannot sell your shares anymore. And people freaked out. They were saying you can't sell AMC, you can't sell GameStop, even if you want to. Too bad for you, you're screwed. And people really didn't like that. So that's why people don't like Robinhood. Another reason I don't like Robinhood is because they don't offer any sort of, at least that I know of, any one-on-one. So Schwab, Fidelity, TD Ameritrade, which is no more. They've been bought over by Schwab. They have, you can email someone who's like an advisor, and you can say, hey, I have a question. How do I find this in my account? Or, hey, what kind of account do I have? Or, hey, is there a penalty for this? And someone will respond to you. They don't have that with Robinhood. So sometimes people will ask me a question and I'll say, just talk to the text, it's like tech support. Go talk to them. And they're like, I can't, I have Robinhood. Someone else asked about what does it mean to buy the whole position. What it means is if I wanted to buy 100 shares in a company, I would buy the whole position in that day. I would buy all 100 shares right now. This is called lump sum investing, and it gives you the most amount of time with the most amount of shares to benefit from compounding. It is preferable to dollar cost averaging, which is the opposite of lump sum. It means every month you buy 10 more shares, or 5 more, or 1 more, or 25 more, or 50 more, whatever, until you hit your goal. Or maybe you never hit your goal. Like me with an index fund, I'm putting in a little bit every month. My approach is a hybrid. I lump sum 50%, so I'll buy 50 shares, and then I'll add a little bit more so I can benefit a lot from compounding, but not the most. And I'm also not tying up all of my money all at once. I think this is especially beneficial in choppy markets where we're teetering on a recession and there's a lot of negative news and there's a lot of scary news happening. Then I don't want to buy my whole position because, hey, if the markets drop a lot, I'm going to swoop in and I'm going to buy even more. So if I put my whole 100 shares, I'm out of money. I can't then buy the dip when the stock drops. Austin says it's 6,500. It's 7,000 for 2024. Biden or whoever, I think Biden, I don't know who did it, but it's under the Biden administration. They've raised it to 7,000 to help with inflation and stuff like that. And that's what it means, Driver. Your follow-up question is, what does it mean to max out? The max contribution for a Roth IRA is $7,000 for 2024. To max it out means you put in $7,000, and it doesn't have to be all on one day. You can put in $1,000 a month for 7 months. You can put in $500 one month and $1,000 the next. Whatever you want, you can do. But when you hit 7,000, you've maxed it out. Hey, ambitious! If you add more, you will be penalized. So 7,000 is the cutoff. If you put in another 100 over that, you'll be penalized, or they'll write you and say, hey, you need to sell off 100 shares or $100 worth because you went over. There's one caveat here. If you have not yet opened a Roth IRA, you can open one in 2024 and contribute the max from 2023 and the max for 2024. So, but you have to do it. Tax day is the cutoff. So whatever day it is in April when tax day is the cutoff. You cannot double contribute for 2023 and 2024 after tax day. This is only if you haven't opened up a Roth IRA yet. So you have no Roth IRA and you go, damn, it's January 23rd, which means I missed my opportunity to fund the account for 2023. That's good news. You can fund 2023. The max was $6,500. And you can fund this year if you're fortunate enough to be able to do that. A lot of people aren't, unfortunately. Let's see. Use Charles Schwab. I use Schwab I used TD Ameritrade for the last 13 years that I was trading. They've merged with Schwab, so I use Schwab. David, you've gained a new follower. Hell yeah. What about MIC? Mike? I've never heard of this. I don't know what that is. I'm sorry. IBM, I'm holding, it's going up, but I'm waiting on a drop is what I'm doing. Neo, I would rather put my money in something a little less speculative. As a stock trader, Neo is probably great. As an investor, the grades are terrible. Valuation, C. Growth, C. Profitability, F. Momentum, D minus. It's just not for me. It's down 46%. I'd rather put my money in, something that's a little bit less risky. Still risky, like Ford, like Tesla, or something different entirely, like Rivian. But I think Neo is too risky for me. Do you give one-on-one advice? No, I don't. I don't sell anything. I don't ask for your money. Kava the restaurant. I love Kava. Is it worth buying any of the Bitcoin ETFs? If you don't want to open your own Coinbase account or Kraken or Crypto.com, and you don't want to have to deal with all of the starting a new account and putting money into it, you can buy a Bitcoin ETF. It gives you the same exposure. You'll pay a fee because these ETFs all have an expense ratio. Let's see, the iShares Bitcoin Trust has an expense ratio of 0.12%. So if you put $10,000 in, your fee would be $12 a year. It's not a lot. Do your own research guide. It is on my website, kennethsuna.com. It's just my first name and my last name. Click on the menu. It'll be up here. If you are a boomer and don't know what a menu is, it's going to be up here. Or it'll be down there if you're on your phone. Click on it. It'll pop open. You'll see all the free resources, and they're totally free. The Do Your Own Research Guide is a link to every website I use to do my own research. I use Schwab. This is for Anthony. I use Schwab. Thought on the 80% drop in the market that some TikTokers are talking about. I think you're talking about my buddy Tim. No, I don't think it's going to drop 80%. Herodin says, what do you think when you say full position, or what do you mean when you say full position? I think I answered that one, but I buy the full amount that I want. Okay, I'm going to scroll down to the bottom. I got 4 minutes left and 52 questions. Kava made a comeback. It sure did. How is your pro wrestling career going? It's not. I want it to be. I broke my back on the very first day, so it's all over. That was in 2003. It's a long time ago. Is it bad to invest now? No. It's always good to invest. You're talking about the next 20, 30 years, not 2 weeks. If you're nervous, buy a little at a time. You don't have to buy your whole position all at once. Do you list what you don't buy? You are in my DMs asking for donation. That is not me. It's a spam account. Big Baller Briss XIX. Please report the account who's DMing you. It is not me. There are over 1,000 Trade, Invest, Simplify copycat accounts out there DMing people saying, give me money, I'll invest for you. Give me your Bitcoin, I'll manage it for you. I had someone yesterday write me, or last week, say, hey, I got a DM from you. I just want to make sure that we're still on for the options course that you're going to be teaching me later. I said, that's not me. She goes, I'm DMing you right now on your backup account. I said, that's not me. And she was like, but I'm talking to you. And I was like, it's not me. It's a scammer. And she was like, oh, shit. She was like, good thing I asked. Good thing I came to your other account to confirm that the time was gone. I mean, my God. Other people will write me and they'll say, am I really talking to you on this other account? And I go, no. And they go, but these people, they'll DM you and they'll go like, hey, how are your investments going? Sounds like something I'd say. I will never DM you. I'll also never follow you. I make it a point to say I won't follow anyone back, which I know pisses people off or maybe it hurts feelings, but I feel like it's a way better way of saying, if you see someone following you that looks like me, it's not me. People who follow me, anyone who's new and who's just followed me today, you will immediately get 10 new followers and they will all be _ Trade, Invest, Simplify. Trade, Invest, Simplify with 2 Ys. Trade, Invest, Simplify 1. Trade, Invest, Simplify 1 period. They're all fake. Robinhood will match Roth contributions. I've heard of this. I think Microsoft is above the Apple. Yes, Microsoft is now Microsoft has now overtaken Apple as the most valuable company around at 2.95 trillion. And what is Apple at this morning? Oh no, it's back to Apple. Let me just double check on Ameritrade because their data is more real time. Microsoft's market cap is 2.9 trillion, and Apple is 3 trillion. So for a very brief moment in time last week, Microsoft was more valuable than Apple, but now Apple is back on top. Some limits on the Roth. Yes, it's 7,000. I just finished reading everything from your website. Ambitious. That's awesome. Thank you. Do you buy index funds, shares, crypto all from the same app? No. My crypto is on like Coinbase, Kraken, and Crypto.com. My investments are through Schwab, which used to be Ameritrade. And yes, my index fund and my individual stocks and my Roth IRA are all on the one website, and then my crypto is all on another. WWE is rising. Yes, WWE is now moving to Netflix. This is massive news. Massive news for Netflix. Massive news for WWE, which is now TKO. WWE stock or TKO stock is up 18% this morning. Raw to Netflix. Hell yeah, I saw that. This is huge news for Monday Night Raw. Look, I'm a lifelong pro wrestling fan. I've been a pro wrestling fan since I was a child, and I never missed an episode of Monday Night Raw until I dropped cable. And the minute I dropped cable, I no longer watched Monday Night Raw because there was no place to watch it live. Coming to Netflix is massive. I love it. Can you explain dilution? This is for Kaisel. A company will dilute shares when they issue a secondary offering, for example. So IPO, initial public offering, is when a private company says, okay, we're going to be on the stock market. We're going to go from private to public. And we're selling 30 million shares. They make that money. They use that money to raise their business, and that's it. They've made the money one time from going public. If they are in financial trouble down the road and they go to a bank and they say, hey, we'd like to take out a loan, and the bank says, well, it's high interest, you're going to pay 7% interest, the company might not want to pay that. Well, their other option is to do a secondary offering. So like they're going to release more shares onto the market. So they had 20 million or 30, I forget what I said, but whatever amount it is. And now they're saying, well, we're going to have to do a secondary offering. So we're going to add another 20 million shares that we're going to sell to the markets to raise capital. So now the company that had 20 million shares, now they have 40 million shares on the market. That's not good. They've diluted the amount of shares on the market, which means it's going to be a lot harder for that stock to move. Another example of dilution can be splits. So you get a company like Apple that's $700 a share, and they go, well, we're going to do a 10-for-1 split. So we're going to give you 10 shares for every share that you had, and the stock price is going to get cut by 10 times. So it's going to drop. So if it's $1,000 a share and they do 10 for 1, it'll go to $100 a share. And you'll get way more shares, but at a much lower price. And way more shares dilutes the market. So Apple has 15.5 billion shares on the market, which can make a company like this very hard to move. If they had, I'm going to go to Chipotle, 27 million shares on the market. It's a limited amount of shares, which creates what am I looking for here? What's the word when you have a God, I'm having a total brain fart. It's like a supply and demand thing. If there's less of something, more people want it, more people are inclined to hold on to it. It's a lot easier to move a stock where there's only 27 million shares versus something where there's 15.5 billion. So what Apple has started doing recently with all of the money that they have is they've started doing buybacks. So a year ago, Apple had 16 billion shares. Now they have 15.5. So they're buying back their shares to undilute the amount of shares they have on the market. If they can do this, and they can go from 15.5 to say 10 billion, which will cost them a massive amount of money, Apple will be a lot more likely to have bigger rallies. Is CI dividends growth misleading? Cigna. Cigna's dividend is 1.61%. Oh. Is this accurate? That they've grown their dividend 161% in the last 5 years? Maybe if they went from no dividend to or a very small dividend to 1.61%, it's, I guess, possible, but I'm not that good at the math. I bought NEO at 8. It is now 6. I don't sell. If it goes to 0, do you think it's a dead company? I mean, if it goes to 0, yeah, they're bankrupt. So I think we have explained the dilution for Kazel. 29 more comments. I leave at 11. I wrap this thing up, and it's 11:04. Opinion on Tesla earnings tomorrow. All eyes on Tesla. I don't have a guess. I'm not gonna make a guess. If it's bad, I mean, Tesla's probably gonna dump. And if it's good, it might go up. Really, more importantly than their earnings is their guidance for the next quarter. I'm ready to start watching your YouTube videos. Hope to be ready to invest by February. Good. Buying back shares is above intrinsic value is destructive. Yes, sometimes people don't like that. How much do you think Netflix taking them in will affect shares? Well, for TKO, the stock is up 20%, which is massive. Well, it's up 17% now, which is massive. For Netflix, Netflix is the one who's out. They're spending billions of dollars to get WWE to come to them. So in the meantime, Netflix is basically unchanged. It's not even up 1%. In the next 10 years, though, it'll be very telling because a lot of wrestling fans probably already have a Netflix account, but a lot of wrestling fans might not. And if they want to watch WWE, if they want to watch Monday Night Raw, they have to open a Netflix account. You're also going to be getting people who are tuning into Netflix more frequently. So all around, this is good news for both. Wade Wilson, what's up with DWAC? Yeah, I mean, I hate to say it, but any investment surrounding Trump is going to be a dud. Let's see here. Well, I don't know, actually. I mean, this thing is up 161% in the last year to date. Wait, is this possible? It's an imminent failure. The headlines are sell before it's too late. New revelations, same concern. Diminished opportunity. Concerning headlines. Trump's DWAC is not the time to invest emotionally. Strong sell from another guy who says it's going to 0. Last year, in the last 12 months, it's up 207%. I personally wouldn't touch it, but it's up a lot. What are your thoughts on Andre the Giant, one of the greatest of all time? Raw is on Netflix. It will be in 2025. That's the deal. Kindhearted says, make sure to look at the followers. Yes, if you get a follow or a DM from someone claiming to be me, look at how many followers they have. Most of the followers they have are purchased. They bought 10,000 fake accounts. So you click on it and you go, oh, 10,000, it's got to be him. Or it'll say backup account. There is no backup account. It's only this one. And yes, Kindhearted is 100% right. Look at the followers. If you get a DM from someone saying, hey, let me invest your money, first of all, I'll never do that. Second, click on the page. If they don't have 220,000, it's not me. Does 3M have a good dip now? Do you mean dividend? Or do you mean dip like the stock sold off? It's down 11% year to date. That's pretty good, but like in the last 12 months, it's down 21%. In the last 5 years, it's down 50%. In the last 10 years, it's down 5%. I mean, this is a stock that's been in free fall for a while. But it's $96. It could drop 50% from here. And then it could drop another 50%. It has a 1-year price target of 108, which is up 12%. It has one sell order with an $83 price target. It has 0 buy order recommendations. 0 buy recommendations, 8 holds, and 1 sell. So I don't know if I would go near a company like this that's been in free fall for the last decade. Roth says, what impact will Raw on Netflix have for TKO and for Netflix? Huge impact for both. So for starters, Netflix has a global footprint. They're everywhere. People will now be able to watch Monday Night Raw on them instead of cable. So for example, let's say you're a really hardcore wrestling fan, and you don't want to you don't want to give up cable television because you won't be able to watch Monday Night Raw anymore, at least live. Now you can cancel your cable and save a lot of money and open a Netflix account. A lot of people will be opening Netflix accounts. This is good for Netflix. A lot of people will be tuning into Netflix every Monday for Raw, every Friday for SmackDown, every Sunday or Saturday for these pay-per-view events. So they'll be seeing more Netflix content as a result. It's good for Netflix also because this is the first live streaming, I think, sports or sports entertainment. So more could be coming to Netflix, which could be huge for Netflix. And it's good for WWE because they lost a lot of fans who don't have cable anymore. All right, let's see what we got here. I have 224,000. Hey, it was 223 this morning. Big Bird says, I would never let anyone invest my money for me. I'm the same as you. When I hear people who say they have financial advisors, I'm like, what? Why? Like, you can do this yourself. It's not that hard. And they're like, well, I'm busy and I don't have the time. You don't have to. Index funds. Just pick a few and put it, people don't want to do it. They want it, I don't know. Do your own research guide. It's on my website. It's just my name, kennethsuna.com. Click on the menu. It's totally free. There's no email sign up. 5 billion. Holy shit. What am I missing? What was 5 billion? How about Netflix? I love Netflix and I own Netflix. All right, everybody, I got to wrap this live up because I'm going to repost this on YouTube. And the longer it is, the more time it takes, blah, blah, blah. So for the 145 people in here, I always do this. How many people followed from this live today? 82. 82 new followers. So thank you to the 82 of you who have followed. Check out all my playlists on here. Check out my YouTube channel. Check out my website. Everything is free. There's no series. There's no gatekeeping. I'm not blocking anything and saying, hey, if you want to watch this video, it's $10. It's all free. All right. All right. Goodbye, everybody. Thanks for watching. I will be back on Thursday at 10 a.m. here on TikTok. Bye.